Hey, Robert.
Hey, Yaron.
How's it going? Welcome, everybody, to our latest riff. Today, we're going to talk about crypto and Bitcoin and how to make sense of the price movement, both up and down, and how to make sense at all of how these prices are set. So we published on the Ingenuism Substack. We published an article on Monday talking about this, so hopefully you can access that as well if you want to review that. But we're hopefully going to get into maybe a little bit more depth today on our discussion here. So, Robert, how should people think about so Bitcoin or assets like Bitcoin, where the traditional kind of pricing model that finance presents us with doesn't really seem to apply? There are no future cash flows, at least none that are easy to predict. The time frames are huge, so it's hard to figure out what a discount rate is and over how many periods of time to discount it. So how do these assets, financial assets, get priced if not based on kind of the traditional parameters?
You went full professor right there into
Full
these kind of
professor.
cash flows,
That's right.
which works pretty well for a lot of financial assets. But I think we should start by saying, what do we mean by assets like Bitcoin? Because it's not just assets that don't have obvious cash flows. That's one way you can get bizarre pricing, but it's more generally assets where there's just enormous uncertainty about really what the long-term future looks like. And that can be a new technology like crypto or any sort of blockchain protocol, but it could also be, I don't know, plant-based meat. Beyond Meat is the same kind of asset, because what we're really talking about are assets where the pricing model, whatever it would be, whether it's discounted cash flow or something else, is lacking because there's just not enough information yet about what is really going to happen. There's obvious potential, but there isn't enough realized to start nailing down what that potential means. And so you end up with, I guess, take Beyond Meat and we'll move on to crypto, but you end up with an idea, and first you have to figure out, is it a bad idea? Like, will anyone buy plant-based meat? Because if it was, I don't know, insect-based meat, I don't think anyone would buy it, even though it would probably taste better. Then you have the question, once you find out, okay, some people will buy it, is it a niche product that only crazy vegetarians buy, or is it a product that actually a lot of health conscious consumers will end up buying? And that takes a long time to figure out, because a lot of products start out looking good because they appeal to their niche and the niche is fanatic about them. But when they try and go mass market, it just completely falls on its face.
And there's also technological risk here, right? Can they actually produce a Beyond Meat that tastes like meat? Because that's the whole point of this, is that it continue to taste like meat.
And that's the embedded question, because to go mass market, it has to actually taste like meat. It's not Beyond Meat if it's actually only appeals to a small number of people who either like the taste or don't care that much about taste or just won't eat meat. So you've got that uncertainty, and that uncertainty plays out slowly over time, and it leads to very, very binomial type outcomes, where you either end up solving the problem and going mass market and becoming a huge deal, or you don't solve the problem and you stay a niche product and you end up a much smaller company, and potentially with bankruptcy on the way because you were trying to grow into that large company. If you take an example like Krispy Kreme, which has fantastic donuts and people are rabid about it, and you decide to go national and go mass market and you build Krispy Kremes on every corner, you run the risk that in fact donuts are a niche product, and despite the fact that people love them, they're only going to eat so many donuts a week, and Krispy Kreme ends up going through bankruptcy because they planned to be a big deal and they turned out to be a niche company. So we got Bitcoin, and it's even worse. All right, so we got the first problem, which is there's this uncertainty. Will Bitcoin end up being a method for transaction among a small niche of people, or will it be something that the mass market uses? And it's a big deal, and we don't know yet, and we won't know for quite a while, it appears.
Yeah, and it seems like the kind of the Bitcoin maximalist, I think they call themselves, are those who believe that Bitcoin will replace every money on the planet Earth, and it becomes the dominant, not just the mass market, but the dominant means of transaction, that it becomes the money. What gold maybe used to be in the 150 years ago, Bitcoin becomes.
And it has to go that way to get the maximalist scenarios of in terms of what Bitcoin is worth, because if you're a maximalist, you say, well, Bitcoin was a project, but then it actually began to prove its value, and it was worth $1,000 a Bitcoin, and then it ran to $60,000, and you missed that, but you could get the next one, which would be a run to, I guess now we're talking about $3.6 million a Bitcoin. And there are people who are out there making the Henry Blodgett type positions, like Bitcoin will be worth $1 million. And if it goes to $1 million, or goes to $3.6 million, even more, we're talking about, with 18 million Bitcoins eventually in circulation, 18 trillion to something like $50 trillion worth of Bitcoin, which is basically the global money supply.
Yep.
So
that's how they calculate the number. Yeah.
Yeah, you have to replace everything everywhere forever for that to work out. And so it'll take a while to figure out. Now we are skeptical. I think that's justified. Obviously, I think that's justified. And other people are rock solid, sure, putting most of their net worth or all their net worth into this. And that is the dynamic that creates the kind of crazy pricing that we're seeing well in advance of things being resolved. Like, we don't know what Bitcoin's future prospects are going to turn out to be. We don't have a lot more information than we did 6 months ago, but we certainly have much lower prices. And how that happens is a really interesting phenomenon, because we've seen it happen in multiple of these very novel and very exciting markets, where you end up with that big, almost binomial volatility well in advance of actually figuring out what's going to happen. It just sort of seems like it's animal spirits, that it's Rand Casino, and it's not. It actually plays out in a way that is not predictable in its details, but the general framework is always how it seems to go.
So let's talk about how that happens. Let's talk about how it first goes up, and then we can talk about how it goes down. So Bitcoin is trading out at a buck a coin way back, and it slowly starts itching up, and then it kind of accelerates up in kind of a step function all the way to 60,000. So walk us through how that happens and what kind of investors are participating in that rise.
Well, when Bitcoin is a buck, nobody's taking it seriously. And when I say that, I don't mean it in a disparaging way. I mean, it's a fun project, an experiment. There are stories of people who worked really hard to be able to pay for a pizza with Bitcoin, and now looking back, that pizza cost them several $1 million.
Yeah.
And that's because they weren't taking it seriously in the sense of it actually replacing every single currency on the planet. But they were interested in the project, and so they were providing the mining services, they were holding Bitcoin, they were buying Bitcoin, they were selling Bitcoin. But as a joke, again, not disparagingly, but not as this is a serious financial instrument. And over time,
curiosity.
It's a curiosity. It's a hobby. It's fun. People trade baseball cards. People collect beer cans. People do a lot of weird things.
Yep.
And Bitcoin was one of those weird things. And over time, most of those weird things die out. I mean, I think I still have a box of beer cans from the 70s that I was collecting somewhere in my parents' garage. Yeah. It goes away. It's a fun fad. You enjoyed it, but it was never an important financial application in your life. But some things do start to gain some credibility. And by that, I mean, people start to take them seriously. Bitcoin stops being a joke. And again, I don't want to piss anybody off, because I don't mean it at all disparaging. I mean, it's a game. It stops being a game and it starts being something more serious. And then the price goes up a lot, because if it's serious, it's not at $1 and it goes to $100, but still at $100, it's a small total value of all Bitcoins ever to be in existence is still under $200 million. So it becomes a very much a niche element rather than what we talk about Bitcoin today, where it's in the newspapers. But people are starting to take it seriously.
Mhm.
And the people who are buying it or for $100 are certainly taking it seriously, because they could lose $100 for every Bitcoin. And that process where you start off with people starting to take it seriously, and then you move into people getting very enthusiastic about it, and then you move to a point where people are starting to evangelize about it, is the critical launch piece for crypto, for internet stocks, for the railroad stocks back over a century ago. Everything has to go through that process of somebody putting a flag down and saying, this is the future. And then if they're convincing, if there's a story that enrolls people and gets them enthusiastic about it, then you start to see this really not steady, but this almost, as you said, stair step rise in prices as the asset, let's say just Bitcoin, but as Bitcoin gets more credibility and people start talking about it, taking it seriously, more people get interested. They see the kind of returns that have been possible in the past. They're interested in that in the future. So they become more excited about it. They become evangelists. And as long as that momentum continues, which requires that Bitcoin be something. Like if Bitcoin were just a total Ponzi scheme or something that was completely made up, if we made up Ingenuism coin and we just took people's money, but there was actually no coin, then they would not go anywhere, because eventually people would be like, what the hell is going on here? But Bitcoin is a real thing. Blockchain is a real technology. And so it continues to build and build and build. And as long as more people are getting excited about it, the price is going to tend to go up. And because that's the beauty of crypto, is you can control the supply in a predictable and rigorous way. And so Bitcoin itself is not designed to match supply and demand. So the price has to adjust to match supply and demand.
So go through the kind of the 5 different categories of potential investors. And how kind of they play a role in driving prices up, and then, of course, in how they drive prices down.
I think at a minimum, the way I think about it is you need 5 categories of investors. What I call the evangelists, who are the most excited. They're the ones who put their entire net worth into Bitcoin. They lever because it is the future. It's going to replace all money. It's going to be $1 million Bitcoin minimum at some point down the road. Then below the evangelists, you have the enthusiasts. So they're excited about Bitcoin. They're buying Bitcoin. They bought into the story. They're not quite at the same level. Like, there has to be a distinction between evangelists and enthusiasts. They're not at the same level, but they're definitely excited about Bitcoin. But they're also people who will take money off the table. If they had the foresight to buy 1,000 Bitcoins at $10 a Bitcoin. When Bitcoin hits $1,000, they're selling Bitcoin. So they're not committed diamond hands. We're never going to sell this because this is the future. And then something below that would be maybe the Bitcoin curious, people who know about Bitcoin. They'd like to own Bitcoin. They certainly wish they bought Bitcoin 3 years ago. Below that, you would have the skeptics. I think we fall into that, where we never buy Bitcoin, but we know about it, we follow it, we wonder about it, we think about it, but we don't see it. But if Bitcoin were to fall back to $100 a Bitcoin, and there was some easy, secure way that I could hold that Bitcoin that didn't require me to remember a massive key or put it into a what's the right way to put it, a less than proven exchange, then we might say, hey, let's put $100,000 in the Bitcoin. And because it might be the future, there is some interesting potential there. And then there are the Bitcoin haters. And you hear these people talk about Bitcoin's going to go to zero, and they may be right, but they believe there's zero potential. And so those would be the 5 buckets that I think about. And of course, the haters are not involved except to the extent they are willing to short Bitcoin, which generally speaking, they don't, because they're smart. There's just too much downside and not enough upside. And then For the skeptics to be involved, we'd have to see a huge price drop, and the skeptics never got involved on the way up. The curious are sort of the buy on the dips people who are right now thinking, well, you know, we've gone from 60,000 to 20,000. Maybe I should buy a little Bitcoin. And we get more involved if they didn't get scared off, because you're not determined at birth what category you're going to be in. And then once you're in a category, set there forever. But you have these different levels of belief or enthusiasm about Bitcoin. And at the peak, you have it trading between enthusiasts, because when there's no real information about what the long-term future of Bitcoin is going to be, where the best news is that, you know, Nicaragua starts adopting Bitcoin, you know, that's or that you can buy a pair of driving gloves from Tesla using Dogecoin. Those things are just not definitive answers. And so you're trading completely on speculation, and that's fine, because that happens all the time. That happened with Beyond Meat. But if you're just trading among the evangelists, then you're trading at very high prices. So I assert that last fall, the evangelists were trading Bitcoin, and they were primarily leaning towards over time selling, not because they don't like Bitcoin. They love Bitcoin. They're diamond hands. They would never give up on crypto, but because there were a lot of alternatives that were showing up. And this is how the momentum swings, is if you just had Bitcoin and every other cryptocurrency was outlawed, then there's no reason that prices would ever come down. They could come down because eventually you might have a situation where there's people give up on Bitcoin because it never actually provides any real world use. But as long as there's that potential and Bitcoin is continuing to make progress and there's new innovation, then you would get a very high price for a very long time. But that's not how the world works. When you get very high prices in something and there's the option to create substitutes, people very quickly create substitutes. We saw this with internet stocks. You see this with cryptocurrencies. We saw it with social networks. We'll see it with the next big thing. And as these new opportunities come along, they start to distract the evangelists. Not that they don't like Bitcoin, but that they are interested in repeating their success. You know, if Bitcoin made them centimillionaire, then getting in even bigger in the next wave of crypto could make them a billionaire. So you become diluted at the top, and you start to see prices trend down because you have to bring the Bitcoin enthusiasts in, and they're doing most of the trading. And so even though everyone's still excited about Bitcoin, you have a lot more supply, so you need a lot more demand, and the demand has to come from people other than the evangelists, unless enough enthusiasts are becoming evangelists. So it's all this really wild dynamic of how the enthusiasm for the new thing is evolving, and how quickly people are creating opportunities to invest in the new thing that expand the pool of investment opportunities.
So why do you think the decline over the last 6 months, 7 months in Bitcoin and more broadly in crypto has been so correlated with the rest of the market, particularly the tech NASDAQ sector?
Well, I think that there's a liquidity story. And it's a changing liquidity story. It's not that there was some, Richter scale 9.8 of liquidity that hit the market, but it's that the Fed and other central banks around the world, not just the Fed, were committed to providing liquidity coming out of the pandemic. The pandemic stretched out for longer than people were expecting or hoping. Liquidity is very popular. It tends to support prices. And so until it started showing up in goods and services, in inflation, the central banks were happy to err on the side of continuing to add liquidity. And then you saw a shift, and the Fed has been not at the very, very forefront, but has been generally leading this among major economies. So with the Fed, you see an increase in interest rates in March. You see a shift from by actively building portfolios of treasuries and agency securities to stopping building that portfolio and just maintaining that portfolio. And then we saw this month, the Fed increase interest rates 75 basis points. We saw it was already planned, it had been announced, but we saw the Fed move from replacing the securities that were maturing on their balance sheet to letting them largely run off. So the Fed has gone from being a net buyer to a net zero to a net seller, not in open markets, but essentially of treasuries. And now we're seeing treasury auctions go very, very differently than they were 4 months ago even, because this massive buyer is out of the market. And that the combination of a tightening liquidity market and rising interest rates, it's not surprising that it's bad for crypto, because if you're in crypto, you are out of the traditional money market. And when interest rates are zero, there's very little opportunity cost with that. And as interest rates go up, the opportunity cost goes up. Now, I don't think that many crypto investors think, oh, I can get 1% at my bank now when I could only get 0.5% before. But at the margin, if you're trying to bring in if the long-term price success of crypto, not the actual success, but keeping prices high, depends on a continuous inflow of new enthusiasts and evangelists to offset the increase in the number of coins that are out there, then the increase in interest rates is going to have a big impact. So it's the combination of the supply of crypto growing and the tightening of liquidity and rising interest rates at the same time hitting the supply of new investors, so on the demand side, and that hitting demand for all of these risky assets. So everything that looked like it was the future, it was the darling of the post-pandemic world, or whether it's crypto, all of these things have come down dramatically because we are no longer in a world where everyone's excited about it and just trading with each other at high prices.
I wonder too, how many people were actually taking on debt. At 0%, you can take on a lot of debt, or at very low interest rates, you can take on a lot. And buying crypto, given that it was going only up, it was quite a deal. You could borrow money at 3% and invest in something that was doubling every few months. That was amazing. And how much, when interest rates started going up, that spigot, dried up, and suddenly they had some of these evangelists had to exit the market, given the debt burden and other assets maybe taking a hit. And so then, given that the number of evangelists is limited, which means the amount of capital that the evangelists have to trade is limited, once they get hits, it's hard to sustain the price at those high levels.
That's absolutely right. And the combination of prices turning down and interest rates going up is a huge problem, because you need more, we usually call it margin, but whatever you want to call it, you need to actually post cash. And if you can't borrow it because interest rates are rising, or if it's very expensive to borrow it on a relative basis, if you were able to borrow at 2 or 3% and now it's costing you 6 or 7%, that's doubled or tripled. And so it's something that I agree is really going to hit the ability of the most enthusiastic crypto investors to continue to express their enthusiasm. I mean, at this point, it seems like there's only one crypto investor left standing who has significant liquidity to continue to express their enthusiasm for the market as a whole.
One crypto investor, who's that?
He's got a double last name, and it's on the tip of my tongue. And
it's the FTX guy.
Yeah, FTX.
The guy who owns FTX.
Yeah, FTX has been a money spigot. I mean, high frequency trading is incredibly lucrative if you do it right. And it's much more lucrative if you have inefficient markets. I mean, high frequency trading in the stock market is is pretty mature and not that lucrative. I mean, it's lucrative, but it's not like the early days. But in crypto, I am sure FTX has been printing money, and to the extent you abide by high frequency principles, you don't carry large positions. So whether market's going up or down, a high frequency trader can make money. And so that it's the one. FTX is the most interesting whale because it's clearly an evangelist, but one who has bet on crypto as an infrastructure play rather than crypto as a currency. I'd be concerned, because if you think back at the first internet boom, which I think it is a great analogy to what's going on with crypto, where you have some early players that seem to be potentially going to change the world. You get a lot of enthusiasts, even evangelists. Prices go through the roof. Nobody can make any sense of it, but it keeps going up. People keep coming in. You know, I remember people coming in the end of 99 or the beginning of 2000 saying, look, I just can't stay out of this market anymore. And everyone else is making money. And it's, of course, the worst possible time to finally concede and jump in. And I'm sure that was happening with Bitcoin over the last, around the turn of the year in the fall and in the winter.
Yeah.
And so you end up with this flood of new internet companies. Everything comes down, but the most shaky business models come down first. So a lot of crazy .coms and information portals that were never making any money and had no obvious way to get to profitability, they all came crashing down. And then, people would point to, well, but the more stable internet companies, those are going to now thrive because there's less competition. But as you get that turn of momentum for liquidity reasons, just because of basic human emotion, it's not easy to reverse it. And so then the rock solid internet companies came down, and everyone started talking about whether Amazon was going to fail, and their stock was in the low single digits. And of course, if you had bought then, it would have been a phenomenal investment. But nobody knew. And so then everyone pointed to the infrastructure players like, Cisco that was making the routers, and Lucent that was doing fiber optics, and said, well, okay, well, at least if you can't make money digging the gold, at least you can make money selling the picks and the shovels to the gold miners. And that's where FTX is, except Cisco did go down 80%. Both in terms of the stock price, but also their sales and their earnings plummeted. So it's
and Lucent disappeared pretty much. So.
And Lucent disappeared. Cisco stayed around. Cisco is still a successful company, but it's very hard to maintain your evangelism, not because it's hard to stay enthusiastic, but because there's so many hits coming from so many different directions. And if you move in early, if you think about, if someone had said, well, I'm going to save the best .coms, they probably would have put themselves out of business if they started in 1999. Now, if they started in 2003, they made a killing.
Yep. So his name is Sam Bankman-Fried.
That's right. I should remember Bankman because
Bankman, exactly. Thinking the same thing.
So Bankman-Fried is, I think, going to be the least liquidity constrained among the evangelists. And I don't know anything. Like, I have no real information about this, but given the company that he runs, and given the breadth of the problems, and the fact that other companies that ostensibly shouldn't have been exposed to the general level of crypto prices, but they were because they were lending, that's where you want to watch. Because if FTX starts to have problems and has to pull back, then there's nothing that will hold up the crypto market except for an eventual coming in of, the skeptics. Prices would have to fall to a point where people start to get excited about the upside because prices are low, not because they think upside is so big.
So Micah Saylor just tweeted a few hours ago that he had bought an additional 480 Bitcoins for about $10 million at an average price of 20,000 per Bitcoin. So as of 6/28, MicroStrategy holds 129,699 Bitcoins. That's a lot. Acquired for close to $4 billion at an average price of 30,664. So he's under the water, by he's lost a third of what he purchased. He was looking brilliant at 60,000, not so much at 20.
Yeah,
But
and
still
Tesla's
investing, still
underwater.
buying. This is the evangelist.
Yeah,
He's
and
an evangelist.
he's definitely an evangelist, and you know, it's really interesting because MicroStrategy is probably the best positioned of the highly leveraged Bitcoin evangelists, because as a company, they were able to, they were shrewd enough to issue bonds that it can't be called. You know, if you finance a speculative asset like Bitcoin using short-term debt that has to be rolled over, then you're just asking to blow up, and you almost certainly will. But if you finance it with 30-year debt that doesn't have to be rolled over, you could wait it out. It'll be very painful going from 99 to 2003. But if you can survive that, then you get to benefit from the upswing. And MicroStrategy is one that is positioned to do that. They also, you know, sold equity. Their capital structure better matches the speculative nature of Bitcoin. And I sure as hell would not be holding MicroStrategy stock right now. Not investing advice, but it is a difficult time when you're early in this kind of swing to make it to the bottom.
All right. Any predictions on how low Bitcoin will get?
Oh God. So if we want to use our analogy of the first internet companies, the best internet companies went down 90%. Yep. And a lot of them went down more, even 100%. So if we take 60,000 as the peak, and we take Bitcoin as, you know, the blue chip of the cryptos, you know, all of those I think are reasonable assumptions. Although I think the peak was what, 69,000, closer to 70,000.
Close to 70, yes.
So I would take the under at 10,000. I think right. Bitcoin will go under 10,000, and I don't think Bitcoin will go to zero. What about you?
Yeah, I definitely think it's going to go under 10,000. I don't think it'll go to zero, and primarily because I think there are enough evangelists out there, and enough what's the second category? Enough believers, enthusiasts who can keep it afloat at a certain level. I don't know what that level is. Maybe it's 10, maybe it's 6 or 7. Who knows? I mean, that's just pure guesswork. But it's still, see that I still see a fundamental difference between it and the .com. So every one of the .coms, you could imagine, without being too crazy, what cash flows, what profits, what their business model was. With Bitcoin, if you're a maximalist, yeah, it's going to replace all money, but that, I mean, I think the probability of that happening is very close to zero, if not zero. So what is the other business opportunity that Bitcoin has? And people suggest different things, but it's still so far reached. It still isn't, there isn't a business model that one can grasp at. So it could go down 99%, right? Because of that. Now, but I do think because there's so many people who are maximalist, who are enthusiastic, who care about this, I think they'll keep it at some reasonable level, whatever that means. So I don't think it'll go close to zero, but yeah, under 10,000, I think it will. It will. Okay. It seems to leap down in chunks of 10,000. Kind of. It really is a kind of a step function. It's very interesting. Right now, it's bouncing around 20,000, and the next step down would be to 10. We'll see.
Yeah, and it is a little bit misleadingly stable in this sort of model, because if right now the curious are trading, then maybe they're happy to trade at 20,000. And by that, I just mean that there are people who are interested in selling and buying every day. So prices can stay at 20,000 and transactions can happen. But if you have to move to the skeptics, then you have to basically get your on to buy. Yeah. And that's definitely under 10,000.
Yes, a lot under 10,000.
Too bad though, because we don't have a bet. We need to find a Bitcoin curious who will take the other side of the bet.
And I wonder, are there betting markets on these things? I guess the betting market is Bitcoin.
Is Bitcoin. Yeah.
Yeah.
This is more of a derivative,
That's
and
right.
maybe there's a listener who is interested in taking the over.
Taking the other side of it.
at
I wonder if there
10,000.
are options out there.
Not yet. Futures contracts, but
Just kind of no
I
options.
mean, not listed. I'm sure you could get an option if you.
I mean, I know a lot of people who are evangelists, so you'd think that they would be willing to take a bet on.
Yeah, let's change it to 15,000. Since if we're going to be betting with evangelists, then we should
That's
just
right.
say 20,000. I'll definitely take the under on 20,000.
All right. Well, thank you, Robert.
Thanks, Yaron.
We
Maybe
are
we'll
going
talk
to-
about some of these ways that Bitcoin could actually be worth something long term besides
Yes.
magically replacing the dollar at some point in the future. But I think next week we're off.
We're off next week. We'll be back in 2 weeks from today. Great.
Sounds good. Thanks, Yaron.
Bye.